Are you a psychiatrist who wants to start a private practice, but you get freaked out about risk mitigation and legal liabilities when it's just you running the show? Well, this video is for you. I'm Alana Miller, MD. I'm an integrative psychiatrist who mentors psychiatrists and psych NPs on integrative psychiatry protocols and business strategies to be successful in private practice. Today, we're going to be talking about legal considerations and risk mitigation when starting and running a psychiatry private practice. Disclaimer, I'm not a lawyer, so if you want legal advice, talk to a lawyer. What I will share with you are the practical legal considerations that I keep in mind when running my practice and that are really good enough for most clinicians. Another disclaimer is if you are a psych NP, there are additional considerations you'll want to keep in mind if you have a private practice, and these rules vary quite a lot by state. There's two main things. One is the collaboration rules in your state if you're in an independent practice state, or require a collaborating psychiatrist, and if you require a collaborating psychiatrist, what are the regulations surrounding the way that agreement needs to be set up? And then two, there are certain rules in certain states, California is one of them, that really limit how psych NPs can advertise their services. So I'm not going to be covering all of those details here, and in your case, I do recommend talking to a lawyer experienced in working with psych NPs in your state. First consideration, in my humble opinion, I think psychiatrists generally preoccupy themselves excessively with legal liability concerns. I think it's because of our conscientious nature that we think of the worst case scenarios rather than the likely scenarios. And the truth is that the overall risk of malpractice in psychiatry is incredibly low. Here is a graph of malpractice risk by specialty. At the top are the highest risk specialties like neurosurgery and cardiothoracic surgery. And then all the way at the itty bitty bottom is psychiatry, which has the lowest risk of malpractice of all of the medical specialties. And then on top of that, the biggest risk factor for malpractice is exposure, or the number of patients you see. In a psychiatry private practice, the total size of our patient panel is much smaller than what it would be in a full-time med management job. Since in private practice, we're generally seeing our patients for longer appointments and more frequently. So for example, in a full-time practice that does some psychotherapy, you may have a patient panel of only 100 to 150 patients. Whereas if you work at Kaiser, say, or a big agency, you may have a patient panel of 500, 800, 1,000 patients because you're working 8 hours a day, seeing 10 to 15 patients a day, and only seeing them every 3 months. The other reason why psychiatry private practice is particularly low risk is that the patients seen in private practice are honestly generally higher functioning and have good outcomes, which makes the risk of a malpractice suit less likely because the really bad outcomes that can happen with our patients, like suicide, are just less frequent. Also, since we see our patients more frequently and generally have better relationships with them, it's less likely we'll get sued because patients don't just sue doctors who make mistakes, they sue doctors they don't like. So don't be a jerk, and that's going to help for a lot. Having a good relationship and rapport with your patients is protective, and it's so much easier to have that kind of personal relationship in private practice as opposed to a job where you're seeing so many more patients and someone's breathing down your neck about RVUs or something like that. So that all being said, how do you protect yourself against the very small but not zero risk of malpractice in a psychiatry private practice? You get malpractice insurance. It's really that simple. Although the risk of getting sued is extremely low, the consequences if you get sued are potentially catastrophic, and that's what insurance is for. Now, the wonderful thing about malpractice insurance is that your interests and the malpractice carrier's interests are totally aligned. They want you to pay your policy dues and never need their services, and you want to pay their policy dues and never need their services. So they will help you achieve that goal. You can call them if you have a difficult case you want to run by them, and many of the companies offer services where they will audit your documentation, your practice documentation, to make sure it's up to snuff. A quick note that many people seem to misunderstand: incorporation does not protect against a malpractice judgment. You need malpractice insurance. Incorporation does have tax benefits when you have a private practice, and you need to be making a certain amount of income for those to kick in, usually 10K or so of gross revenue a month, but does not offer liability benefits for service-based providers. This is a big misunderstanding among clinicians because incorporation does offer liability benefits if you have a non-service-based business, like a real estate company or a restaurant. Yes, in those cases, you put your real estate into an LLC and that limits your liability. However, for a professional service-based business, lawyer, doctor, accountant, etc., it doesn't matter if you are practicing with a corporation, a malpractice judgment can still take your personal assets if you don't have malpractice insurance. Okay, so you're sold, you're gonna get malpractice insurance. How do you pick what policy you're going to get? I'm going to cover 1, occurrence versus claims policies, 2, the amount of coverage to get, and 3, specific companies to consider. Number 1, occurrence versus claims-based policies. The TLDR of this is that you want a claims-based policy in private practice, but let me explain why. So there is often a time delay between when a malpractice incident occurs and when the malpractice claim is brought. An occurrence policy covers you as long as you have or had the policy when the incident occurred, even if you don't have coverage when the claim is made. So for example, I sign up for a policy today, I commit malpractice tomorrow, I don't recommend this, but for the sake of this conversation, and the day after I cancel the policy. And then a year later, I'm sued. I would still be covered with an occurrence policy. On the other hand, for a claims-based policy, you need to have the policy in effect both when the malpractice incident happens and when the claim is brought. So for the example I gave, I would not be covered if a claim is made after canceling the policy, even if the policy was in effect when the incident occurred. But Alana, I hear you saying, you just told me to get a claims policy, but it seems like an occurrence policy is better. Yes, well, it is better, except that it is many multiples more expensive per year than a claims-based policy. If you have a claims policy and you decide to close your practice and you don't need insurance anymore, but want to make sure you're still covered for any claims that are brought in the future, all you have to do is pay a single fee for what's called a tail policy that will cover you for any claims brought in the future while the claims policy was in effect. It's much cheaper to have a claims policy and then just purchase a tail when you need it, as opposed to paying so much extra for an occurrence policy year over year, especially when you might have your practice for decades. And if you end up having the policy until you retire, often the fee for the tail policy is waived. My company, MIEC, does this. Now, all of that being said, I hope it's clear to you now that if you have a job, you want to make sure that job is covering you with an occurrence policy, or paying for your tail policy when you leave if it's a claims-based policy. Or else, if you're sued after leaving the job, you would not be covered. Now, let's talk specific malpractice carriers. I use a carrier called MIEC, like I mentioned, which I'm really happy with and I highly recommend, but they only work in a few Western states, I believe, like California, Alaska, and Hawaii, maybe some others. Other insurance options that members of my mentorship program, Dream Practice Academy, have used are the Doctor's Company, PRMS, MedPro, Presidio, AMA Medical Liability Monitor, and APA and the AACAP American Professional. A few notes to consider. 1, make sure you are covered for every state that you practice in. So if you have a multi-state practice, make sure that the company you work with writes policies in all of those states you're going to be practicing in. 2, make sure that you are covered for telepsychiatry if you plan to have a telepsych practice. I've actually gotten reports that some companies, the Doctor's Company comes to mind, are no longer writing policies for telepsych-only practices. So keep that in mind as you're planning for whether you're going to have a telepsych or a hybrid practice. Just a slight tangent, I'm recording this in February 2025, and we all know semi-recently, a couple of months ago, the public health exemptions for having a telepsych practice were extended through, I believe, of November of this year. And so legally, you can still practice as a full telepsych practice, and honestly, probably it's just going to get extended again every year. I really don't think we're ever going back from a legal perspective. However, what I am getting reports of is that independent companies have their own policies that are making it more difficult to have telepsych only practices. So for example, like I mentioned with the Doctor's Company not writing policies for telepsych only practices, certain pharmacies that are not filling prescriptions for telepsych only practices, Walgreens comes to mind. And then 3, I've even heard that Quest Labs is not opening accounts for new providers who are saying on the application they have telepsych only practices. So I just think from a practical standpoint, we should all be prepared to at least have an office that we theoretically could use if we're required to. Now, back to the malpractice. What dollar amount of policy coverage should you get? I'm going to tell you what I read in a book by the white coat investor, James Dahl, who also wrote a book called The White Coat Investor's Guide to Asset Protection, which is basically the Goldilocks rule. You don't want too much insurance, you don't want too little insurance. You don't want much more coverage than other physicians in your specialty in your geographic area have, because that could potentially make you a target. And you don't want much less, because if you do get sued, that will piss off the claimant's lawyer, who may decide to go after your personal assets. So for most people, a 1 million/3 million policy is a good middle ground, and that's what I have. That means 1 million per claim and 3 million total for all claims in the policy period. That's really it. Don't go out and spend $5 grand on a lawyer. Don't freak out and never get started and have your practice. Just get malpractice insurance. Have a good relationship with your patients and practice good medicine. If you have or want to start a psychiatry private practice and are looking for more helpful tips and strategies for launching, growing, and optimizing, click the link below to get access to my free training video and learn more about my flagship mentorship program, Dream Practice Academy. I'll see you there.